Good morning from our global headquarters in New York. I'm Manus Cranny with Danny Berger in London. You're welcome to Bloomberg Brief. Let's say your agenda.
Yet another all-time high. Stocks and gold break records. Two-year yields drop to the lowest in 2 years, with bets rising on consecutive jumbo rate cut. Threat and cooperation. Iranian president delivers dual messages at the UN as tensions in the Middle East ramp up. And another DOJ probe. U.S. officials investigate German software firm SAP for potential price fixing. Good morning, Manus.
Danny, good morning. We're back to that land of it's a 50-50 on whether they'll go for another 50 basis points in one of the last two meetings of 2024. Right now, there's just a mini reprieve in these markets. 41 record highs on the S&P 500. Nvidia, of course, managed to deliver over 100 billion swing yesterday, taking the Nasdaq up. There are more calls for 6,000 on the S&P 500. David Costin over at Goldman Sachs joins the echelons of BMO and Evercore in terms of making that call. How much money do you put down on the consumer confidence being at a three-year low? The call on that number was before the rate cut, but it is a three-year low. Don't worry. BMO say, don't worry about consumer confidence cracking until the consumer stops spending. Roll it over, have a look at the bonds, because what you've got here in the bond market is a two-year low on the two-year paper. And again, this is the kind of pressure very much at the short end, the continued steepening that takes place. There was a nice auction yesterday on this $69 billion worth of two-year paper. Today, you get $70 billion worth of fives. So it's a stumble in consumer confidence. Fear not, Danny.
Well, we also have some breaking lines on the OECD, Manus. They're giving out their growth expectations. For U.S. GDP, they see it rising 2.6% in 2024. That is unchanged from their last estimate. They see it, though, at 1.6% in 2025. That is a downgrade. Previously, they expected 1.8%. Just to quickly run through their other expectations, China GDP, 4.5% this year, 4.5% next year. For the euro area, noticeably weak than the others, 0.7 this year, 1.3 in 2025. So, Manus, I think one of the takeaways here is this downgrade to U.S. growth, not for this year, but for next year. So it's this expectation of not a recession, not slowness, but slowing to come.
And in many ways, this risk on in the equity market is more fixated on the sustenance of growth and the continuation of growth here in the United States, rather than necessarily the rate cuts that we get coming through, Danny. But I'm hanging my hat on BMO's view, which is we don't need to worry about this consumer confidence number, because until they stop spending, keep on running.
What is it, the hedonism? Are we going back to that?
Oh, poor old Paul Donovan. We'll murder that for the whole of 2024, won't we? The hedonism of... yours is hedonism, mine is hedonism. Hedonism of the U.S. consumer.
You're one of them now, Manus. That's all I will say.
I'm all in.
The warnings about growth or weaker growth tie in really great to our next guest, to Max Kettner's view, because he's been writing about growth. But on the other side of things, because there are these expectations maybe for weaker growth, he says with the likely more aggressive pace of Fed and perhaps global rate cuts, there could be a non-negligible risk of a growth uptick and threat to the disinflationary progress in the coming quarters. I'm pleased to say he joins us now. He's the Chief Multi-Asset Strategist at HSBC. Max, wonderful to see you in person. So you're warning that growth could have an uptick as others are fearful of growth. What looks the most mispriced if this is the case, that growth could be higher than expected, as with inflation?
Yeah, I think there's a couple of things. When we look at short-term inflation expectations, you look at, for example, one-year CPI swaps, that's still barely 2%. That clearly is not factoring in any kind of perhaps a pickup in inflation, or not even a pickup in inflation. Inflation just staying a little bit stickier, right? So we don't have to see a big pickup in inflation. Just in terms of your question, in terms of what is being mispriced, we don't have to see that. It just needs to be a tad stickier than thought. And already we would see short-term inflation expectations really mispriced. I think it's also some parts of the cyclicals and equity market. You know, when we look at materials, you look at energy as well. You know, we had these China demand concerns 2-3 weeks ago around oil prices. I think that's a bit misplaced, because when you look particularly also positioning in oil, look at Brent net longs. I mean, we're a net short now for the first time in history. So, how do you want to be utterly bearish on that still when everyone's given up on that already? So there's quite a few, I think, cyclical things, short-term inflation expectations that do look quite attractive now. And overall, of course, when you look at equity markets, if inflation stays a bit stickier, but it stays stickier because of growth, it stays stickier because spending continues to run at a solid pace, that's really good for earnings, that's really good for equities.
So if it's a really good narrative, stickier inflation, Max, good morning to you. You see no risk of that stickier inflation causing the Fed potentially to do some kind of a pause or maybe even a U-turn. Do you just stay long until they blink?
I think that's it. Yeah, that's absolutely it, Manus. I think a month and a half ago, I think I would have answered that question a little differently. I think you would have been like, you know what, maybe they tread carefully in the beginning. Maybe they'll do a sequencing of 25s and then they'll pause and they'll see how this is feeding through into the economy, how inflation, how super core services inflation are evolving, how perhaps the goods disinflation, how that is dissipating, how all of those things are evolving. But I think there's two things that already happened. We've had Jackson Hole, where in Jackson Hole, really Powell made it very clear we don't welcome any more weakness. So in other words, sort of 25 basis point cuts are now the base case. And if we were to see more labor market weakness, for example, if the next payroll number is below consensus, suddenly, the 50 basis points is fully back in play. And that, of course, it's sort of an almost any news is good news kind of setup where you say, well, you know what, if currently consensus for the payrolls is 130, if you get 180, great. It means the economy is doing better. You could buy a bit more cyclicals. You could be more bullish on the cyclicals. If you get a downside surprise, it might be negative on maybe a day, maybe two. But then I think very quickly we'll realize, well, that just means we now get, instead of a 25, we get a 50 basis point cut, perhaps. We price in that. We get more valuation tailwind. And then you're going to have to start buying those dips and risk assets very, very quickly.
So just to be clear, in a scenario where you do get good data, you do get stronger data, does a rally continuing hinge on the idea that no matter what, the Fed will be cutting by at least 25? I
think so. I think the next 4, 5, 6 meetings, they made it very clear, right? Think about it last week with the Fed. Effectively, we had retail sales, industrial production, housing data, the 3 regional Fed surveys, CPI, PPI, everything above expectations. So you sit there. I mean, I was in New York last week. We were talking about it, and we're like, why would they do 50? That doesn't make sense. No, like you start 25, you can say, well, if things change a bit, if they get a bit worse, fine, we'll do 50, right? We may accelerate. We stand ready to do more. Fine. But all the data, all the short-term data really didn't tell us, oh, yeah, you need to come rushing out of the gate. Absolutely not. And they did it. And that, in combination with Jackson Hole, really tells us probably 25, the next couple of meetings, is the default. Right? That's really the default. So that tells us, look, I mean, if you want to be bearish in an environment where GDP growth is running at 3%, where the nowcasts are saying 3%, where the high-frequency data, look at the Fed's weekly activity index, still 3%. Look at the Chicago Fed's retail, the weekly retail sales, still going up. I would discount those consumer confidence numbers yesterday as well, because, frankly, if you look at the last 4 years, they haven't told us anything. They haven't had any correlation with spending data, so meh, don't really care.
Well, don't worry about that consumer data, because Danny and I are spending. We're all in.
You guys are going to spend like crazy. Yeah, we're going to spend. I mean, to be fair, Manus, to be fair, my entire view basically hinges on you two basically spending the hell out of the U.S. economy.
That's a horrible idea to base any view on what Manus and I do. I think we're too erratic to kind of pin that down, Manus.
that is a stretch out there. But you are reaching for risk, Max Kettner. We know you're bullish on equities. That's fine. Given what you've just said about the landscape, this then reinforces your uber bullish view on reaching into the dark end of junk.
Yeah, I think so, because effectively now, think about the last couple of years on Jackson Hole. 3 years ago, they did tell us, OK, you know what, inflation is transitory. 2 years ago, they said there will be pain. Fed put is done. Last year, it was higher for longer. Now they tell us, well, actually, if there's more weakness, we're going to do even more. So we're going to cut anyway, or we're going to cut even more. So effectively, they're telling us we're putting on a floor under the most stressed part of the economy. So you look at things like small caps, you look at low quality, look at how much triple Cs have rallied in the last couple of weeks, right? So that really, those kind of junkier assets or the higher risk assets, they really can stay in vogue for a bit longer now, until perhaps at some point in next year, we may find out that the US economy has reaccelerated, that perhaps inflation is still too sticky, and the Fed may have overdone it. it. That clearly is a risk, but certainly not for the next 2 quarters.
In the equity market, though, and you alluded to this in one of your answers, it has been more defensive type stocks that have done well. It's been utilities, it's been consumer stocks. Utilities up 6.2% in the past month. The S&P is less than 2%. What changes that the contour that it's everything rallies and it's the riskier type stocks too, and it's not just defensive and utilities leading the way?
Look, I think the defensive rally has mostly been a rally that's been driven by rates and by yields, right? So when we look at utilities, staples, healthcare, all those really, or real estate in particular, also REITs on the equity and the credit side, that's really started rallying from mid-July, from the July CPI number. So it was really a yield-driven rally. So if you are of the view that perhaps yields have to reprice a bit, or maybe that inflation expectations have to go up a bit, some of those bond proxies are probably not the best place to be at the moment. Utilities are maybe a slight exception to that because they obviously also have the AI story now attached to it.
They're literally everything to everyone.
It's crazy because you now not only have the defensive characteristics, but you have the data center and the AI story attached to it. So it may be a slight nuance to that, but I don't think it's really the best place to be right now, to be in the bond proxies. What do we need? I think, we just basically need the market realizing, look, those 25s, they are going to be really the default for the next couple of quarters, right? So the next 6 months, the next sort of 4, 5, 6 meetings, it is going to be that sequencing of cuts. It's very unlikely that the Fed makes a very aggressive U-turn and says, oh, hold on, we were actually wrong. We need to pause now. It's quite unlikely that that is going to happen in the next 6 months. And then that, of course, is really good because, again, we're bouncing off GDP growth 3%. The nowcasts say 3%. Look at earnings expectations for Q3. I think that's another factor that we should look at in terms of how the rally can spread out. In fact, for Q3, earnings expectations quarter over quarter sequentially are either flat or slightly down in all the sectors in the S&P except for utilities, but that's the Q3 seasonality, right? So air conditioning and all that. And for tech. But that we know that, right? We know that story around tech and AI and CapEx. But everything else is pretty subdued Q3 earnings expectations. So one of the things that I think can really drive it is if we go now into the Q3 earnings expectations, people are pretty subdued, pretty cautious still at the moment when we look at our sentiment and positioning indicators. Interestingly, you guys were talking about another all-time high at the beginning.
Yeah.
Yep.
Funnily enough, our sentiment and positioning indicators are still closer to a buy signal rather than a sell signal.
So there's still miles to go in this.
Decent earnings expectations.
There's still miles to go in this rally. You know what, Max? I just hope that whoever's looking after my pension has a half a glass of the enthusiasm that you've got for these markets. That's all I can say, because I want a bit of that bullishness in my life. Max Kettner, keeping it real in the full bull across your assets on Bloomberg. Other stories trending on your Bloomberg terminal this morning. Warren Buffett's Berkshire Hathaway sold another $863 million of Bank of America holdings. That brings Berkshire's stake to 10.5%. Now, Berkshire would need to disclose trades in Bank of America within days for as long as the stake remains above that 10% regulatory threshold.
Cybersecurity startup Wiz is in discussions to sell existing shares at a valuation as high as $20 billion. That's according to people who are aware of the talks. Last July, Wiz had turned down Google's $23 billion takeover bid. It decided instead to go public.
Caroline Ellison was sentenced to 2 years in prison. The former CEO of Alameda Research was charged with fraud and money laundering after the collapse of the crypto exchange, FTX. The judge presiding praised Ellison's cooperation in helping prosecutors convict FTX chief Sam Bankman-Fried. But Ellison was handed jail time to deter others from similar conduct because cryptocurrency fraud is easy, he said.
Coming up, the DOJ is ramping up its probes and now reaching to Europe. German firm SAP under the spotlight. We're going to give you that story next on your Bloomberg Brief.
Bloomberg Brief, I'm Manus Cranny alongside Danny Berger. Stock of SAP is dropping after Bloomberg reported that the U.S. Department of Justice is probing the German software for potentially conspiring to overcharge the government agencies here in the United States. The DOJ is probing Carahsoft, a top technology vendor to the government. Let's get the latest. Oliver Crook is standing by. Ollie, good to see you this morning. How did this come to light? I mean, what's the scale of the business that SAP does here in the US, and how does it fit in with the other company?
Yeah, so listen, it's several billions of dollars worth of sales of software to the government that SAP does over in the United States. And how we sort of came across this was within a filing, and we understand the DOJ hasn't yet brought the case, but is looking into it, just looking into it at this stage, about whether or not SAP is involved in sort of rigging for pricing for software sales to the government. Why it's important is this company, Carahsoft, is sort of a third-party reseller that deals with a lot of these companies. We should say it's not just SAP involved here, but this involves, you know, potentially up to $2 billion worth of sales since 2014 to the U.S. military, to the U.S. government. And again, we should just stress that right now they're just looking at it. This is a civil investigation. Many of these end without any sort of accusations of wrongdoing. However, Manus, if they do find something wrong and they say that there was a fix-in on the bidding, that is considered fraud. And of course, that's enough to freak out investors a little bit today with the stock trading lower.
Well, you also have just the past, 12 hours where it feels like we've been inundated with antitrust action from the DOJ. Late yesterday or midday yesterday, it was Visa. Oliver, is this just the new norm that we're going to have to get used to waking up every morning, whether you're in the U.S. or now Europe, and see this type of thing?
Listen, it's been a very active time for antitrust matters at the DOJ, yes, but also at the FTC. But it's also partially a political decision, right? So far as it's been a priority for the Biden administration and the Attorney General under him to try to bring back some competitiveness into the American economy. That has been very squarely what he has said. So yesterday we had this move against Visa, saying that basically they have a web of exclusionary activity in the debit card market. We should say, for context, that Visa holds about 70% of all the debit cards within the United States. But it's not just been Visa, right? We've had Google a couple weeks ago. We've had Apple. We've had Meta. We've had Amazon. We've had blocked mergers in grocery stores. We've had it over in retail. We've had it in concert tickets. So we have it all sort of ramping up now. Particularly, you know, it's not a coincidence that we have a president leaving the White House now, trying to get that agenda through.
Yeah, the one I still will never understand is aspirational luxury, trying to block a deal there. Anyway, Oliver, I know those still working their way through the court system. Thank you so much for helping us cover it. That is Manus more than me. Manus wants that aspirational luxury goods. All right, Oliver Crook, thank you very much. We appreciate your reporting. Again, the latest coming from the DOJ. All right, coming up, Israel intercepts a missile heading towards Tel Aviv. Hezbollah says it was fired at Mossad headquarters. We're going to have the details for you next and the rest of your front pages. It's your Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's get you some front page news, a look at what's making headlines around the world. First, Hezbollah says that it fired a ballistic missile targeting the Mossad headquarters near Tel Aviv. Israel did shoot that missile down. Hundreds have died in Lebanon as fighting between the two sides continues to escalate after last week's pager attacks.
Front page of The Guardian. Israeli strikes on Lebanon continue as Iran says Hezbollah cannot stand alone. Iran's president challenged the West and said Israel's attacks on Lebanon cannot go unanswered. He also said Iran was ready to engage in a nuclear deal.
And on the Bloomberg, China cuts its one-year policy rate by the most ever in a stimulus drive. And not to be outdone by the Federal Reserve, China's central bank just cut its key rate by 30 basis points. That's the biggest cut the PBOC has delivered on record. Let's get into this. Let's bring in Bloomberg's Jill Desis. Jill, we've been waiting for the bazooka. We had some details yesterday of more stimulus. So put it all in context for us.
Sure, Danny. I think there's a few things to read into, first of all, this big cut today. So this is the medium-term lending facility rate. I do want to caution, I know that, the big size and scope there is that this is a 30 basis point cut, most on record. I do think that that indicates that the PBOC is thinking about what it means to actually put, the pedal to the metal here and actually implement some of this this new stimulus that it's been announcing. But I will also caution that the central bank has been moving away from the importance of that rate in particular is a key rate. The one to really focus on instead, I think, is the 7-day repo rate. This is a shorter-term policy rate that the PBOC has been working over the last few months to really kind of pivot to making its key rate. Now, during this big press conference that we had, just on Tuesday, where the PBOC governor, Pan Gongsheng, came out and announced a bunch of stimulus in China, he actually said that they plan on cutting that rate sometime in the near future, probably after this big Golden Week holiday that they're going to have next week. We'll actually start to see some cuts to that rate. But really, Danny, I think what all of this is telling you in context is that the central bank, at least in China, is really seeing the importance of implementing a lot of stimulus. They're firing on all cylinders here. They're cutting a bunch of different rates as they kind of move toward implementing some stimulus to actually help the economy here.
Well, Jill, yesterday, by the way, the yuan is reacting. It's voicing some strength, breaking through 7. Yesterday, you and I caught up, and you said to me, Manus, this is more about not just the monetary policy, but the fiscal policy. Briefly, is that the next big shoe to drop?
Yeah, that's right, Manus. I think that's really what we're all waiting on here, right? Because, sure, the central bank is doing a lot for its part, but is there going to be any fiscal stimulus? I mean, we talk a lot about how one of the big problems with the Chinese economy right now is that consumers aren't actually spending money. I mean, how much are, lowering rates actually going to help? We'll have to see if there's additional fiscal stimulus that actually comes in. Nothing here yet, but we'll have to see.
It's about stoking the credit side, the demand side, I should say, for credit. Jill, thank you very much. You can throw out all the money in the world, but you need the demand side to work. Jill DeCease in Hong Kong. This is Bloomberg. Good morning from New York.
From our European headquarters in London, welcome to Bloomberg Brief. I'm Danny Berger alongside Manish Cranny in New York. Let's set your agenda.
It's another all-time high. Stocks and gold break records. 2-year yield drops to the lowest in 2 years. This as the bets on a consecutive jumbo rate cuts land. Threat and cooperation. Iranian president delivers dual messages at the UN as tensions in the Middle East ramp higher. And another DOJ probe. US officials investigate German software firm SAP for potential price fixing. Danny, good morning. Back to jumbo debate rate cuts.
Yeah, back to jumbo pricing. We had our 41st record high this year, and the S&P 500 will today be 42 for now. S&P 500 futures down 0.2%. One of the best statistics. Jim Reed at Deutsche Bank this morning. Now the S&P 500 is up 20% year to date. If we can do that this year, it will be the first back-to-back 20% plus finishes since the late 90s. U.S. 2-year yields, they continue to decline ever so slightly, less than 1 basis point. We are still at the lowest since 2022. Was that consumer confidence, that survey coming in quite weak, reinvigorating the 50 basis point rate cut hopes. Meanwhile, euro versus the dollar, little change this morning. The euro has been surprisingly resilient given the weak data we've had coming out of the region. But, Manus, it all just comes back to the dollar side. Weakening of the dollar on expectations that we will get indeed another jumbo cut. Yeah, and we're down to 50-50 again on that at either of these last two meetings. And that's 6,000 level on the S&P 500. I mean, there's a whole club of people up there now. If it's not BMO, Evercore, Julian Emmanuel, but Stuart Kaiser, I love what he said yesterday. The Uber bull case is here. We've just sat and chatted with Max Kettner. I have never seen somebody as bullish all the way around across risk assets. I have to say the message I almost got from Max was good news is good news and bad news is good news, because we're in an environment where he was saying that the Fed's going to be cutting 25 basis points no matter what. I found it really interesting that Austin Goolsbee yesterday saying that anecdotal data is really important here. So when you get stuff like consumer confidence, even though consumers are spending, the Fed's paying attention to it, Manus. Yeah, and I mean, a number of people have said, look, stop focusing on those consumer numbers. A, they were done before the rate cut, and B, until the consumer stops spending, there's no need to worry. And then if you take the corollary to that with Max is you may get a little bit stickier inflation. That may cause the Fed to have to pause. But you do not want to blink on being long risk until that moment arrives, Danny. Yep, that's right. 41st all-time high. Who expected us to be here? So long as that's reflected in my pension sheet at the end of the year. We've got to talk about geopolitics because it is front and center. It's UNGA week here in New York. And again, we're focusing on what's happening between Lebanon
and Israel. Hezbollah has fired a missile aimed at Mossad's headquarters near Tel Aviv. Now, it's the group's first time aiming at the city. Israel shot it down. Iran's president went on to speak at the UN yesterday and called on the international community to intervene.
We condemn Israeli crimes against humanity. It is imperative that the international community should immediately stop the violence and bring about a permanent ceasefire in Gaza and bring an end to the desperate barbarism of Israel in Lebanon before it engulfs the region and the world.
Mark Champion joins us now. Mark, listening to the president there, people, suggest he is a more moderate version on the political side relative to perhaps the military arm within Iran. His message to the UN yesterday was double-sided, really, wasn't it? On one side, talking about potentially starting a new nuclear deal, which sounds very, very strange, and calling on the international community to step in here. Your take?
Yeah, I mean, so we remember that he was elected as a bit of a surprise, really. Iranians turned out to vote who, weren't turning out to vote, hadn't in the first round, because of the message that he had, which was, we're going to, if I'm elected, we're going to try and get the nuclear deal revived, relief on sanctions, and relief for Iranians and a very battered economy. So that's something that he wants, something the regime wants, and that will all happen before October 7th. So in the meantime, you have the October attacks, and, that has changed really the whole environment. And you can imagine that it's going to be an incredibly difficult prospect to try and get any kind of agreement for sanctions relief at a time when the U.S. sees Iran as involved in attacking Israel, or if there is a wider war between Israel and Iran, with the U.S. inevitably taking part. So a very tough message for him to sort of deliver. And I think, one has to sort of pay more attention to what is it that Iran is going to do now with regard to Lebanon, rather than the nuclear deal, because that's really unlikely to materialize anytime soon.
Mark, also at the UN General Assembly, Zelensky will be speaking at 9 a.m. this morning in New York. How do we understand the wider Assembly's appetite to support Ukraine in its war with Russia?
Well, I think it will be divided as it has been. You've basically had the U.S. and its NATO allies, which have been very strong in support of Ukraine. There's lots of debate about just, what weapons should be delivered and how, what restrictions there should be. But overall, the picture has been of very strong support. And that is not shared by much of the rest of the world, which will pay, Brazil's Lula da Silva did yesterday, pay lip service to the idea that, we don't like the invasion. But at the same time, we'll say, but we should end the war, stop supplying, Ukraine with weapons, and basically, let it end on Russia's terms. So I think you'll have, a divided, again, UN Assembly. And again, where the real interest will be is what exactly does he now unfold as his view of how to bring this war to a close, because that is what he's gone to Washington to do.
Mark, we really appreciate it. Mark Champion of Bloomberg Opinion. Now, in the U.S., we are about 40 days away from the election. Pew Research puts foreign policy as one of the top 5 issues for voters. Former President Donald Trump and Vice President Kamala Harris have spoken about Ukraine, Gaza, from NATO allies to foreign enemies on the campaign trail. For more, let's bring in Bloomberg's Bobby Ghosh, who joins us now. Bobby, even though they have talked about foreign policy, we know what's been dominating a lot of the context. It's been the economy. It's been immigration. It's been things like abortion. To what degree does foreign policy move the needle in American politics in today's day and age?
Well, Danny, historically, it has not moved. Foreign policy has been something that has not really moved any kind of needle in domestic politics. The old shibboleth is that foreign policy ends at the water's edge and American voters don't really care. But the fact that you quote that Pew poll saying it's among the top 5 issues, that reflects a change of attitude in American politics. And you're seeing a little of that being reflected in the way the two candidates communicate their policies. They are, at least Donald Trump is, setting out a foreign policy agenda. The Vice President Harris is associated with the foreign policy agenda of the sitting president, who is known as the foreign policy president. So for the first time in my adult lifetime, it seems that Americans seem to care a little more about what's going on in other parts of the world than they have done previously.
You would also say that demographics play into this. We saw the protests on campuses over the Hamas-Israel conflict. The demographics have shifted, and it's very different, perhaps, to our parents or indeed to our demographic as well. These politics matter an awful lot more. Foreign policy matters a lot more.
Speak for yourself, Manus. But yes, you're right. Young people care much more about a few things. Climate. And they seem to recognize that climate policy is connected to foreign policy. And recently we've seen that they care quite a lot about what's going on in the Middle East in a way that we hadn't seen before. Not just in the campus protests, but also in protests around the country. Even now, we're seeing every now and again, I walk out into the streets of New York and I see a Palestinian flag or somebody wearing a Palestinian keffiyeh. These are expressions, and they're almost always young people. These are expressions of interest in foreign policy. And this comes at a time when the conflict in the Middle East seems to be coming to a kind of crescendo. And my sense is that if there is an open war between Israel and Hezbollah, and Israel and Lebanon, we'll see another burst of protest in the streets of the United States.
I just wonder, Bobby, how much it moves the needle, because when Biden was still the candidate, there'd been a lot of talk about double haters, people who didn't want to vote or protest non-votes because of concern over Israel and the Biden administration's support for it. If it is confined to this demographic, do we understand how consequential it could be to the election, whether this type of demographic is enough that Kamala Harris might lose, and especially in places like swing states?
Well, we all expect that the election will be decided by very, very small margins. And even now, at this late date, 40 days away from the actual vote, the margins in the polling is very, very small within the error margins. And so it could matter quite a lot how young people vote and whether they turn out to vote at all. And whether they vote or don't turn out to vote could have a major impact. They're having to choose between two candidates, neither whom really speaks to their concerns. On the one hand, you have Donald Trump, whose whole attitude towards the wider world is one of suspicion and hostility. His whole idea of foreigners, in the main, is that foreigners are trying to cheat us. They're trying to do us wrong in one way or the other. They're trying to come into this country illegally, or they're trying to cheat the American economy by selling us cheap goods, and we're trying to stop that by increasing tariffs. And then you have Kamala Harris, who has not really fully articulated a foreign policy, a view of the world, but she's strongly associated with the policies of the administration that she represents, which is Joe Biden's administration. And there, for young people, that administration has not really exerted American influence in the world. In fact, what we've seen over nearly a year now in the Middle East is that the United States seems unable or unwilling to move the needle. You have America's closest ally in the region, Israel, making more and more warlike moves in the region. And despite Biden saying over and over again that this shouldn't happen, it is happening. So if you're a young American, you're looking at these two candidates, it's not terribly reassuring.
OK, so the takeaway there is that Harris maybe has more work to do. Trump works on sound bites and plays through to his base. Let's just reflect on what he had to say about NATO at the start of the year in February. Let's take a listen.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
That's transactionalism, whereas the Biden-Harris ticket is more about global geopolitics. That voice plays to the MAGA base. But where is it that Harris is missing? What is she missing to rise to match that kind of soundbite?
She has not explained why the United States should be engaged in the world. I think she takes it for granted that the audience or the larger electorate will understand that, and that good sense will prevail. But at a moment when the American view of its place in the world is being assaulted in that way by Donald Trump, I think it's important for Kamala Harris to step up and say, to reassure American voters that the United States has an influence in the world, still the main protector of freedoms in the world, and that foreigners are not just trying to cheat us or not just being delinquent, and to explain why the United States should remain engaged in the West and in the wider world. That message has to come from this, the Kamala Harris campaign. It hasn't yet. There's some time yet.
Well, it certainly matters in Pennsylvania. 2020, Joe Biden took about 1.2%. It's the second largest Ukrainian population in the United States of America. So it's going to bear down there. Bobby, thank you so much for giving us the detail there as we run up to this election. Bobby Ghosh on foreign policy in this election. Coming up, another election issue. We're watching renewables. We'll bring you our exclusive interview with Miguel Stillwell DeAndred, CEO of utilities firm EDP. That's next on Bloomberg. It is Bloomberg Brief. I'm Menace Craney alongside Danny Berger. Well, the Fed's jumbo rate cut, it's giving utilities the boost. We've seen that in the stock market, but it's also according to the wind farm and solar energy project developer EDP. I sat down with the CEO, Miguel Stillwell DeAndred. This is what he had to say about the outlook.
Our business deals well with either stable or decreasing interest rates. I think where it's obviously much more disruptive is when you have a very sharp dislocation up in interest rates, because if you're investing at a particular cost of capital and suddenly that goes up significantly, well, if you've been pricing off that lower rate, then obviously you're going to get squeezed on that. But either stable or decreasing, I mean, that's a much more ideal environment for us.
3 days after we last sat down, which was in March time, Donald Trump came out and said on day one, he will stop offshore wind. Of course, there's a distance between what politicians say they will do and what they will actually do. What would be the worst case scenario if that kind of policy was enacted for you?
First, I think the important thing to note is that onshore wind and solar, which is our primary business, I think there's a consensus that that will continue to be developed and built out over the next couple of years. You know, we've been in the U.S. since 2007. We have almost 10 gigawatts already operational. So this is something that has withstood various different administrations.
Yeah.
I think in relation to offshore, which is a much up-and-coming business, I mean, it's a much newer business, there's only one federal license. And so for the offshore business, it is really dependent on the administration to get that one federal license. The rest is very much up to the states. So in relation to our projects, we have one which is more mature up in Massachusetts. We have line of sight to get that federal license still within this year. And so we have a PPA that has been awarded to us. And so I think, you know, whatever the circumstances, we feel pretty good about that project. In relation to the overall industry, I mean, obviously, if there is that decision day one, I mean, it's not good for the development of the industry, but we'll see what happens.
And yet, at the same time, you have Harris embracing oil and gas. She's pivoted on fracking in Pennsylvania. Through the prism of the investors that you're talking to here, how do they view Harris for your world?
It's much more continuity versus the previous administration or the current Biden administration. So I don't think that people expect big surprises in relation to the Inflation Reduction Act, in terms of the regulation which has to be implemented. The one thing which I would say which is important both for the Harris administration and the Trump administration is to really be able to accelerate everything relating to permitting and licensing. And that's true for renewables, that's true for almost energy projects. I think one of the big things that is holding up the industry and the build out of this infrastructure is still that administrative burden, you know, projects that take a very long time to be developed. So that's really what we've been focused on, is how to accelerate that. And, you know, some of the bipartisan discussions that have been had are applicable both to renewables and to the gas, for example.
Are you optimistic that whoever comes to power, that process of permitting, because this is what they're talking about in housing, they're talking about in energy, are you optimistic, regardless of who comes into power, that can accelerate?
It has to. I think this is a question of managing to build out that infrastructure. And, that is an extremely important thing. So dedicating the necessary resources, doing things like digitalizing these processes, standardizing them, really making sure that people are focused on getting these things past the finishing line. That's super important to be able to get. Otherwise, you're going to have much more demand than supply, and that never leads to a good result.
I'm just curious. Look, the U.S. is obviously an important business for you, critically important business for you. What's your appetite to do? Because when we caught up before, you said, Manus, it's not really about doing deals, it's about consolidating. Has that moved forward as rate cuts arrived and as this market improves? Are you hungrier to do more deals now than you were 6 months ago when we talked?
We view the U.S. as a very attractive market. About 40% of our overall investment worldwide goes into the U.S. So we're investing 17 billion euros over these 3 years, of which 40% is going to the U.S. And so this is certainly a very attractive market, and we want to continue to grow, whether it's through organic growth, wind and solar. Batteries is extremely important. I would never rule out acquisitions, but I think the big focus is really on our organic pipeline.
EDP CEO there sitting down with us. Danny, here in New York when you were in London. Just to put it in context, this is one of the top 5 players, Danny, in the renewables business globally. Here in the United States of America. And when you listen to that conversation, it goes back to the same conversation that you and I had last Friday, which is about permits. This is about taking away red tape within housing, within renewables, and within the energy sector.
And it's just really important considering that the time that we're in, that there's this demand for energy, for AI, which I know you talked to him about data centers, that is unprecedented. There's not enough money in the world. The OpenAI chief, Sam Altman, according to people familiar, had met with the White House, met with Biden yesterday, basically saying we need data centers, and the energy that we need to power these are the equivalent of what you need for small cities. It is an insatiable demand at the moment, Manus.
And add into that the targets that many of the huge hyperscalers have set in terms of renewables and being CO2 neutral by 2030, etc. And that adds in a magnificent new layer of demand in renewables, Danny.
Yeah, if you're Microsoft, just buy yourself a few nuclear reactors. How about that? Okay, coming up, we're going to get you set up for your trading day here on your Bloomberg Brief. This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's get you set up for your trading day on this Wednesday. U.S. new home sales, those will come out at 10 a.m. Eastern. Then we get a few more bits of Fed speak. We're going to hear from Fed Governor Adriana Kugler. That's at 4 p.m. Then candidates Harris and Trump. They will both be speaking on their economic visions in Pennsylvania and North Carolina, respectively. Manus, how you stocks doing?
Well, we're taking a wee breather from the 41st at record high. Some individual names are on the move, Danny. KB Homes reporting weaker than expected quarterly earnings and softer gross margins. Tesla down over 1%. Price target and delivery estimates actually have been raised at Piper Sandler, seeing the best quarter ever in China. Despite that, we're down 1%. Market is lower. Broadcom down 1.2%. Japan FTC plans to inspect VMware parent Broadcom to investigate whether it led the unfair practices. There you go, Danny. More investigations. As you say, this is about a DOJ that is far from done with perhaps getting involved in some of these big names.
Yeah, it does. And look, it impacts risk sentiment at a time when there's no shortage of it. A 41st record high today so far doesn't seem to be on track for it. That's it for us. Surveillance, that's up ahead.